Okay, everybody. Happy weekend. It is Saturday, October 28th. I'm going to post this for Friday, October 27th. But we're here at PreciseAlgorithmTrading.com, and let's go through the markets and do a weekly review. So I've got quite a lot to go through here. We'll do a little bit of a deep dive, and this is our website. Feel free to check it out. It's got some automated trading stuff on it here. Shows how the automated trading works in uh, TradeStation 9.5. It's our code, their platform. Um, and we are exploring TradeStation 10.0 for the sake of some execution issues in the legacy version. So, anyways, we're exploring that and doing some work in the background. Um, Daily review here is where we actually post our reviews every day, and we're actually over in YouTube as well. Obviously, that's where you save this stuff, and I also keep a archive under the daily review, which is right there. So this thing will get updated as soon as I get done with this video. Um, all right, let's close that out. We will come back to stockcharts.com, but let's start with our automated trading systems for Friday the 27th. So here is the YM contract. That's the Dow futures contract. We had some back and forth. Ultimately, I think a down day, but really in the scheme of things, it doesn't matter. I know it might sound funny to say it doesn't matter, but in the scheme of things, well, here's all the trading for the 27th. Yeah, we had two, over $1,000 losses and one $1,700 win, and a couple $500 and $700 type losses. So all in, that was down for the day, but it's really a lot of back and forth. And like I say, it doesn't matter because all in, this is what our picture looks like for the YM chart from 727 through 1027, which is 13 months. And that's what we're looking for, is an upward sloping equity curve. Now, it's flattened out here lately, but what we're looking for is for this type of action over here where we went straight up almost to resume. And so I dropped down some of these to show, it's a little backwards, but that's all right. That was 1/3 of 23. That's 511. So we went up gradually through that 5 months, and we're taking we've been generally up to sideways since 818. So this action back here started in February of 22. So February of 22 up until uh, January of 23. So that's a year's worth of data. Like I say, that's what we're looking for to pick back up again. This trading math, really, the math behind it is the same as all this math. So it's really just a matter of getting it back into the kind of market where that's happening. Um, and at the same time, even this type of math over here, this type of trading over here, where we're going up ultimately, I mean, we're in stages. It's fine. So it's actually good. So then you get into, this is the Russell, and this is Friday's trade. I think there was only one in there. We'll take a look. Two of them in there. So they were down for that period. But again, this is what it looks like over that 13-month period. And this one just doesn't trade near as much, but on these volatile breakouts, hang on, sorry. These volatile breakouts like that one, boy, it's irritating. And this one. So, you know, it's interesting too if you look at this time frame back here climbing up like that. This is real similar. The type of price action that had to happen in the markets to get this type of equity curve happened on the Russell similarly to the Dow. So it's generally the same time frame. And then we get into the NASDAQ, and it's been climbing nicely lately. We had a pullback here on Friday, or maybe part of Thursday and Friday. Look at this under the microscope. Each trade for Friday, there were a bunch of them, but there's some successful ones in there. I mean, they're all successful because even if they stop out, they're stopping out for a calculated stop out that keeps you in for when the price action goes a lot higher. We showed I think a $6,000 trade this week earlier in our videos. Well, there's a $3,000 trade, and you won't find a $3,000 loss on this page. So there's the biggest losses are $2,250. So there you go. There's a $6,000 trade from Thursday. That, that's what we're doing here. We are limiting our losses and maximizing our gains so that we can have an equity curve that looks like this in the long run. And yes, we have modified our algorithm, I'm going to call it slightly, along the way to level out these bottoms and not make them so deep. So like I say, if you look at, maybe I need to post the math again sometime for the summary sheet out of TradeStation gives you the actual max drawdown that these are, and you have to have your account size set up. Your account total size has to be set up so you can weather these drawdowns, because drawdowns are a part of trading. Alright, that was a deep dive into that. I wanted to show some of that. Let's jump over into trade or Thinkorswim, and we'll look at Friday's action. Was rough as far as it was really bearish, and this is the hourly chart on the right, the daily chart in the middle, and the weekly chart on the left. And I am a swing trader, position trader, based on the daily chart and the hourly chart. I use the weekly chart as a just a gauge of the overall trend. But I mean, and the overall trend over here, I mean, in the moment is down, but it's generally up because we have this huge move that started on in the week of 313 and ended in 724, and now we've had a pullback. That's 1 down, 2 up, 3 down, which is the biggest, typically the biggest leg down. 1 down, 2 up, 3 down, 4 up, 5 down. That in the daily, that mid-range, that middle drawdown, the third leg is still the biggest one showing here. I could prove it if I literally go from the highs to the lows, do the math, but at least so far, unless this one somehow goes even lower. But again, over here on the hourly chart, if you're long in the SPX right now, you can see why you shouldn't be, because this is an ATR stop, and it's literally like, I won't say holding price in, but it's showing the trend. And until it breaks to the upside, which is why I have this alert right here to show when it breaks that to the upside. In fact, I can pull it down a little bit, which I keep doing every day until this thing breaks. That's going to be my first sign that maybe the trend has changed. And sure, like this sign here on the daily that happened between 10:19 and 10:20, it broke back down again after it looked like it was breaking higher on 10, 11. So these things, it's not perfect. That's the way the markets move. But let's look at something else. I'm just diving into the SPX. So this is on the daily. I've showed this every now and then. This is when we did break back down again. We've been going farther. We're screaming down to the lower average true range here, which is 1, 2, 3 lower, 3 average ATRs. And again, when you get to the third ATR, it tends to be a reversal. Here it reversed. Here it reversed for a day and then pulled back it harder, and then it reversed back to the mean area or the mid area. So we're back down here again. I expect some more weakness into Monday and possibly that capitulation looking move, even if it's temporary, to happen pretty much down there. And then we should get a nice snapback rally to the mean or the midline here. And I wouldn't expect to be able to negate all this on the first round, the first move higher. So one more thing, let's go to the monthly chart. This is the same SPX, and I'm going to do a little thing for us here. Let's just do this live and draw. This is literally the Fibonacci retracements tool, set up to snap to the highs, lows, and open, high, low, and close. I just drew, and I've also got it set up for 50%, 0, and 100. We could, well, it doesn't matter. I mean, remove that drawing. Let's draw it from make sure that's the high. 4808.93, 4818.62. So let's do from the high there to the low there, and you can see this tail here on the monthly chart literally came down to the 50% line before it reversed. Well, that's kind of a big deal. I mean, that is a reversal zone. In order for a pullback to really be valid, it needs to hit 50% of the previous swing. So this is the previous major swing, and then it pulled back and hit it, and then it went higher. Now it hasn't got back up here again, so we're seeing some weakness. But let's look at this swing now. We'll go from the low here to the high there, which we already established, and we've hit in fact, this thing pulled back up, went to it, and now it's drawn down from it. So that makes this a valid swing. And now this one, if we go from this low to this high, this pullback is not a valid swing. So we can expect it to fill in that gap and become and get down to that level at 40.51, 40.49.33 actually. And those are like expectations that will likely get filled or fulfilled. So you can do this on every chart, and then when you literally go back to like these charts, you can see that's where that 50% line is. We're going to go down and at least have to tag that line, which by the way is also this line back here. So that, well, in my opinion, helps a ton to understand the market and its dynamics. So that's the S&P. The Dow, we could do the same thing. I'm not going to do it. You guys can all do it on your own. But similar kind of a thing. The Russell, it looks like it's even. Actually, this one I do want to go do a deep dive. I already put these levels in here for a reason, but I'm going to go check them out again. This one needs to be pulled down to here for when that thing breaks out. And the NASDAQ. So the NASDAQ started to try to rally, and I think, well, that's a 50% line. there you go, from that level to that level, and now we've pulled back. So the the Nasdaq's going to be the canary in the coal mine. It sure looks like, and the strongest, obviously, coming back out of this. So I'm going to go here and snap in an alert. You just right click where you want the price. You gotta wait on the computer sometimes to catch up. Bear with me. Come on. And create performance. Imagine that. Some of these indicators take a lot of juice, so it's no wonder we have some performance issues sometimes, but I'd sure like to get some of that cleaned up. At or above, and make that, and then that's an alert that'll go off when the price gets up there. So, all right, oil. Let's look at oil. Same thing goes for oil. Literally, you find the pivot low here. That, I don't know if that pivot broke the previous one by 50%, but that one to that one, and you see if it pulled back to there yet, which I think it did. And now we're looking to, this thing's actually looking like it's starting to break out back out to the upside. So even though we had all this nice down action recently. So all right, let's flip to the bullish percent indexes and wrap this up. And it shouldn't surprise anybody if these are low. So the industrials didn't move. The NYA tacked on a new O. The transports didn't move. The NASDAQ tacked on a new O. The SPX tacked on a new O. The OEX tacked on 2 new O's, and it's sitting at a support level. We'll see if it breaks. It's down 14.81% for the day. And then the NDX tacked on a new O. So yeah, like I say, there shouldn't be any surprise that that stuff's lower, and it is walking pretty much with the markets right now, but we should see something happen pretty soon to where these start to flip the other way, even if the regular charts don't yet. So that'll start to show things when they're starting to think about reversing. So with that, I'll leave you guys for the weekend. Have a great one, and go Bucks.